Hey guys, welcome to another video. Thanks for joining me. Now, in this one, I will be talking about something that I didn't really plan on talking about because I already had a different subject to actually talk about in this video. But with the current news about this company, I just really want to bring it to you guys' attention. And I believe that it's something worth talking about. Now, this company is one of those companies that a lot of people have moved away from because they believe that this company is on a downhill, which may probably will not be able to turn things around. And yes, they were on the verge of declaring bankruptcy at some point, but things have started to turn around over time. If you're new on my channel, my name is Stephen Ojo, and on my channel, I talk about investing and aviation. So if you are interested in any of the subjects, kindly subscribe to this channel. And if you find value in this video, please give it a thumbs up because I really appreciate it. Now, the company of discussion is General Electric. I know it's one of those companies that most of you will really run away from. And the reason is this. If you don't know why a lot of people are against General Electric, it's very simple. They have a ton of debt, that's right. But most people have invested so much in this company and they've lost so much money that they are yet to even recover. Now, at some point, this was maybe back in 2015, price of GE was around $30. And at that point, the environment, the aviation environment was booming. The health sector was doing well. There was a lot of innovative ideas that GE was bringing also to the table. One of them was the lighting company that they were trying to, spin up and hopefully start turning things around in terms of profit. And with those profits that they were expecting to make, they were supposed to start reducing their debt. Now, one of the things that GE did that really bit them in the butt is that they've stretched themselves too thin. And one of the things that they did was to use so much leverage. Now, with the new CEO stepping in, one of the things that is done is obviously to reduce their debt and the leverage. Now, one of the things they've done over time is to sell a few of their businesses that are not profitable. And some of those businesses are highly capital intensive. And the ways to get, obviously, to turn things around is to sell businesses that are capital intensive and not making you money and focus on the ones that you're considered experts in. A few businesses that GE have strongholds in are their aviation. They make good engines and they've been doing that for a long time. And their engines are quite reliable. The other thing also is the health sector. They make all these machines for scanning and doing a lot of tests, and they have a lot of advanced imaging systems as well. And these things are highly profitable because guess what? This COVID. Here's the thing. Today, GE is currently selling for $12.60. At some point, GE went all the way down from the highs of $30 all the way down to about $6, almost $5. They almost became a penny stock at some point. And this was when GE piqued my interest because that was exactly the time they also started changing things around. If a company starts to deleverage, you need to take them seriously because at that point they've realized their mistakes, started tracking this GE stock. And in fact, I actually bought a few shares of the company. Now, obviously, this is a very risky move, but I'm going to tell you how I went about it, especially for new investors. Now, I have to tell you, I am not an expert in this field. So I don't want you to think I'm an expert and take my words for it. Okay, I might be wrong. And if I'm wrong, correct me in the comment section below. I would appreciate it. I started taking GE seriously because, first of all, the price was attractive. The company was well established. One of the things that really stood out to me was this. Most of the engines that you see on all airplanes, whether it's Airbus, whether it's Boeing airplane, most of them are designed by General Electric. So for this kind of company to go down, the chances are very slim. Now, it's not that it's not possible. Of course, anything is possible. The second thing is that this company serves the whole world. They have businesses in the US, UK, in Europe in general, Africa. They have different, parts of the world that they run different kind of businesses. And for them to go down just seem unlikely to me. And now, of course, I could be wrong, but I'm just sharing my own thoughts with you. So with that reason, I bought a few shares. Now, one of the things that you want to take away is this. If you're going to buy a share in a company that you're not really sure of the direction of where things are going, you don't want to put in too much into it. Now, of course, they're not still profitable as we would want. So over time, as I realized that the company was moving in the direction that I wanted, I added more shares of the company to my portfolio. I am sitting currently at about 10% of my Robinhood portfolio. Now, I do not want to exceed that, okay? Because again, I don't know exactly where this company is going. But I'm going to share something interesting with you right now. I realized I didn't nail this on the head. The key thing here is that when you're investing in a company and you're not sure of the direction in which the company is going, make sure you don't put too much money into it at first until you get a confirmation that things are headed
in the right direction.
Currently, the price, like I said, is around $12.60. As at 3 months ago, the company was around $10. And I remember I made a video about this as well when GE reached $10. Now, as at 1 year, GE was $11.86 pre-COVID. According to the last earnings report, the expectation by investors was that they were going to have about 9 cents per share, but they were shy of that by 1 cent. Now, according to last year, they closed the fourth quarter with about $4.5 billion in free cash flow. Now, this is very important to investors because that is how a lot of companies are able to stay in business. Remember, when there's cash, well, they can stay in business. When there's no more cash, they run out of business. And that is one of the key things that a lot of investors pay attention to, especially a company like GE. Now, we're not looking for profit right away, but we're looking for a change in direction. Now, according to Barron's report this morning, they're predicting that GE could reach about $15 per share. Now, that's something that I believe that is easily attainable at the stage we're in right now. And with the pace that GE is moving, I believe it should hit that unless something comes up again. Of course, there could be anything that comes up and the price would go down. 5 years ago, GE was around $30 and right now it is $12. Of course, it is down about 57%. $15 was the price of GE in 2018. As you can see, the price of GE was trending sideways for the past 1 year and now it's rising gradually. And that is exactly what you really want to see. There was a downtrend here and eventually it stayed sideways. And over here, we have this like a U-shaped recovery now. And the goal is that it's probably should get to that $15 in the near future. Now, does that mean that I'll be buying more shares? Now, it all depends on what comes up in the future. Again, I am not exceeding 10% of these stocks in my portfolio right now. And that's for a reason. Over time, if things get better, I will probably be acquiring more shares. Now, it's up to you to decide on what you want to do. I leave it to you. Thank you so much for watching this video. And I hope that you found some information that is usable to you to decide if you want to invest or not. Now, again, you don't have to invest because I am not an expert in this. These are just my own thoughts and opinions. All right. I hope you found it interesting.